Hello, hello, hello. How's everybody doing? So I hope everybody's had a great weekend. This is 50 pips, 30th of June, 2013. Not making any trade calls or recommendations, just looking at some charts, doing some live technical analysis for learning purposes only, educational purposes only. And the fact that you're watching this means you've read, you understand, you accept all the disclaimers here on the website. So again, we're going to try and keep this short and simple. Just a reminder, next Sunday is going to be the first Sunday of the month, so first Sunday of July. So that's when we're going to have our full 1 hour live webinar. So everybody's welcome to join. I'll post the link on the blog, and then you just sign up and we do a full review of anything anybody wants to. And we've got the Q&A so people can ask stuff live. Here's just the usual update. So why don't we just mix things up a bit and look at some blank charts. So what's going on here on some of them? Let's look at the metals. Let's start with gold. So gold's basically going into, so remember last week, just to put things into context, we ended the week on end of the week, end of the month, end of the quarter. Okay, so as we said, it's not a high odds play to try and fade flows on the last day of the quarter or of the month. And basically we saw some end of the quarter and month balancing going through. And now normally it would be healthy to see a bit of a bounce on all the sell-offs going into the beginning of the week. It doesn't have to happen, but that's what I would expect to see. The other thing, just to put things into context, keep in mind that this week, Thursday, right, Independence Day, so U.S. markets is going to be a very slow week in the U.S. market. So potentially even on the equity side in the U.S., we could be in a relatively tight range for the whole week. And last but not least, still reminder, we've got BOE and ECB on Thursday, which is the 4th of July. So as the U.S. is going to be off and having a long weekend, we could potentially see some moves due to those in the market. So it's not a day, Thursday is not a day to write off if you're a Forex trader, especially if you have open positions. You might want to keep an eye on that. So going into gold, so I think the most interesting thing here into gold, and I personally pick some gold up because I think it's interesting. You know, we like to buy red and sell green, and there's a certain time where a bounce would tend to be healthy. So what's happened here, we got continued liquidation of gold, and then basically what happened is everybody suspected this was really going to fall out of bed if we broke below the 1300. Let me just put that back on the chart. So 1300 level, and indeed you saw the acceleration. But then what happened, we started to catch bids around the 1200 level, and it looks like it's trying to bounce a bit. I think here the key level to watch clearly going into the week, here's the 1250. So I'm going to put this up on the chart with a different color. And what I would say here, clearly pressure on, this is heavy, right? But if you believe in healthy markets, if you believe in reversion of the mean, you know, markets don't only move in one direction, at least not for always, not for a sustained period of time. So going into the week, these are the levels I'd be watching, right? 1300, 1200 as kind of a range high, range low, and then a mid-range into 1250. And what I would say is, as long as we hold below the 1250, I'd be looking to see some weight on this, so pressure on, maybe hovering in this lower end of the range. But if we start pressing aggressively above the 1250, I would not be surprised to see us back into 1300 quite quickly. Then 1300, you know, that would open a whole other discussion. We start to break higher, we'll have those old strong support which will start to act as resistance. And clearly in terms of a bigger picture and in terms of a broader move, that will likely be a big bull bear line to keep an eye on in case we get movement. But again, don't be surprised if we see a bit of a range market. The market could be relatively slow next week because of all the holiday in the US. Okay, so that's what I would be looking at in terms of gold. Okay, so let me just get rid of all these other charts we have. Let's just go through some blank charts just for a change, just to mix this up a bit. Let's look at the DAX quickly, because a lot of people have been asking me about the DAX. So I think the DAX also is relatively interesting here. And what I would say on the DAX is keep in mind, well, apart from a lot of the, you know, different kind of analysts, different people looking at a lot of people are going to be relatively interested in the 78.6, the hold here of this level on the move back down. Okay, now, so that's probably why you'll see a lot of people talking about the 7667s. The way I'm looking at this going into the week is really where we're hovering right here. So you see basically that big and important past support acting as resistance, and now we're seeing price looking for direction here. There's a chart on the blog with more specific levels here. So what I would say here, this is really an important level, what we would call a bull bear line. So pressure on for a move to try and trigger back down. Of course, you'd want to keep an eye out for this support. But if we start to get pressure moving to the downside, then I would not be surprised to see this try and make a run back down into the 50 back of these most recent move, and that would mean a move back into 78.50s, broadly speaking. Okay. However, do not forget that we've got an open gap here. Okay. And that level is coming in pretty much at the 81.30s. So if we start to get some Momo back above here, do not be surprised to see this trying to make a run for that gap fill. Okay. And what's going to be interesting if you look at that move back up is that you have the 50 back of this whole sell-off from highs to lows coming in just ahead of that gap fill, okay, 81.09. So that's clearly going to be a level to watch going into the week. And should we get some a bit of a pop, that's going to be a massive level for the bears to hold. They will not want to see price close back above that level. So that's clearly something you're going to be looking at. And similar as we said to gold, to the upside, this is probably 81.30s is probably going to be the big bull bear line. Okay. So let's do the ES while we're on the futures, right? ES, we had a bit of a funny moment in the room this in the weekly sessions this week, because going into those lows, I said, there comes a time where you just need to step up and buy some ES, right? And basically, we got a nice little move back up, a nice little retracement, and especially what a lot of people focused on is this whole action which we saw around the 1600s, right? The fact that the first times we came back down into the 1600s, we got very sharp protection of this level, very sharp protection. And then when we broke down, this was pretty much knife through butter, went through previous support, acting as resistance, got pretty much front run shorts coming in, keeping the hardcore pressure on for the for the next move down, more liquidation, and we came down, and then we found buyers coming in pretty much at these 1550s, right? Coming in, well supported protection of the round number there. So what I would look at going into the week here is that if you look at the big 50 back of the move from highs to lows, it's coming at 16.19s. The way I'm looking at this, it looks to me like the shorts have come in and they're trying to cap this right here, right now, okay? So that's a very big resistance that the shorts do not want to see the bulls manage to retake or press back above that. So what I would expect is that if we're going to press lower, we'll most likely either press lower from here. If not, we'll probably see a retest of those highs. And again, as I said, into the end month and quarter liquidation, we got some sellers coming in right at the close on Friday. So it would be healthy to see a move back up into those levels. But keep in mind, if we go into tomorrow and this breaks lower, I mean, this could start to get a lot of traction to the downside. Now, in terms of what big support to the downside, what I'm looking at is the 50 back of that most recent move down. So the bigger support I'm looking at is 1580s to 1570s. Highlighted on the chart right now. That's what I'm going to look at as the support zone. But I would, again, don't be surprised if we stay relatively range bound because of the holiday week, etc. But the shorts really want to see these whole 16.19s to those highs capped. If not, we could be off to the races and we start holding back above 16.19, 60.20s when there's not a lot in the way of the market trying to make a run back up all the way into those 1650s, okay? So, again, don't forget the holiday factor going into next week. what have we done? We've done gold, we've done a DAX, we've done the ES. How about we go back and now we go and look at some, since it's called the futures and Forex, let's look at some Forex. What's going on? A lot of people were asking me about yen. It's not something I'm looking at too much, but I think here you don't necessarily have to be a rocket scientist. I think the big levels of interest right here, right now, the pivotal level is 99s. To the upside, we've got the 100, which is big round number, psychological number, pivotal number. Definitely going to be the key, especially into all the data releases and whatever's going to come out this week. And to the downside, basically we had the 97, which is where all that series, we talked about it on Twitter too, all that series of bids came in and supported this rotation higher, which is currently taking place. So as long as we hold above the 99s, and look at this as a very big resistance zone, but as long as we hold above those 99s, especially in a lower liquidity scenario, the market will probably be attracted to try and take a stab at those 100s. And that's really going to be a big bull bear line for the week, massive level. Okay, so as long as we stay below, we could see some chop. We could see chop inside this 100 pip range. And if we start to break below, I suspect a lot of people are going to be looking at the 50 back of this move from lows to highs. I'm really not looking at fibs that much here. I think yen is more play on, what's hitting the wires and on specific levels. But, you can call it 98 if you want. Let's make this extremely simple, the way we're going to look at this. And that means that if we start to trade below 99s, we could easily try and take a stab back down to the 98s. And that, I would say, is a pivotal level. But as long as we hold above those 99s, the way I'd be looking at it is that 100 test is going to be interesting. Now, keep in mind, should we test that 100, if we ever make a stab at it and we hold above and we continue to hold above, then I would not be surprised to potentially see this really getting some traction and squeezing to the upside. So it's a level I would say you don't want to be stubbornly short if price starts to hold above there. But that's what I would be looking at, and that's the only, you see that the 100 is the different color. So that's really a big level going into the week. What are we going to look at? Let's look at Euro, who everybody always wants to look at Euro, don't they? So basically Euro, let's get on daily. I think the probably most talked indicator on Euros being the 200-day. And what's happened, you see that price is holding below, okay? Market tried to take a stab. Looks like it tried to get some traction. Got a bit of a bit tone going, but it just completely smacked down right below that again, okay? And the level, which had been defended and very, very nicely, was that 130. I think that's pretty clear here. You can go on a 4-hour chart. You can go on a 1-hour chart, and it's clear that the market is uncomfortable holding below the 130, okay? That shorts are covering or that buyers are coming in, but bottom line, whatever you want to call it, is the market is uncomfortable holding below that level. So as long as bids come in supporting this, no matter how heavy the chart looks, as long as bids support this and the market can't get any traction below, it's going to be potentially the risk, as far as the way I'm looking at, the risk is for short squeezes, okay? Now, so going into the week, just to give you a rough idea, what I'm going to be looking at, I'm going to be saying, just again, making it very simple, any move into the 30s to 29.50, this is a support zone, okay? And unless intraday we get traction below those 1950s, or unless we get a daily close below the 130, I'm still going to be looking at this as the risk is for a squeeze to the upside, not the downside, okay? If we break below, then potentially any any rally is going to be a hard sell most likely. Now keep in mind, you don't want to get caught up in the lower liquidity going into the BOE, etc. Sorry, ECB on Thursday. That's probably going to be a key level. But right here, again, this is the fight. This is the fight. It's all about the support. Can the shorts keep on getting traction? If not, after such a big press and failure to get any traction here, the risk is covering, especially into the event risks this week. Okay, to the upside, and we've talked about these levels before. Basically, you've got that whole 31 to 3150 level, right, which is just the opposite side of the coin if you want it, and that's where the shorts meet hitting. So the longs desperately want acceleration above that 3150s. They don't want to see a daily close above there, and the shorts desperately want and need acceleration below the 130, 129.50. And as long as we stay stuck inside this area, it's much to do about nothing, right? And that's why I say, you know, the velocity of the move inside this broader range, it's really not that important. It doesn't mean it's not tradable. It doesn't mean you can't lose money. It doesn't mean you can't make money in the range. But from a broader perspective, unless we get some kind of traction outside this range, most likely the higher odds or the better, most interesting trades is playing the low end or the high end. It could be very, very choppy in here. Okay, and then of course this 200 day is going to be key for the week. What have we done? We've done euro, we've done yen, we've done. Let's see what I can think of. What other pair could be interesting going into the week? Let's look here on the majors. Yeah, I think a lot of people are talking about Aussie. For me, Aussie's really not that interesting because, you know, the market's probably littered with gravestones of people trying to catch this, right? And especially when Aussie starts to sell off hard, you really do not want to start to step in front of it. And you know, this is just going to keep on going until it bounces. Most of my followers know that the more this keeps on trading like this, the higher the odds are that we're likely to see a bounce. That doesn't necessarily mean I want to aggressively trade it, okay? Here it looks like we've got the other round number, because at this point it's pretty much only about round numbers, I would say, is this 91, right? The market trying to look for some kind of support here. To the downside, we've got, again, this is a weekly chart, we've got the 87.60s to the downside, and to the upside, we've got that big previous support that will likely act as resistance. So we've got pretty much 93.80s, the 91 and 87.60s, okay? And I think you can go and look at all different time frames trying to catch a level, but to me, this is simply not that important. It's more of a sideline trade. You know, and to a certain extent, if I had to try and desperately catch something, I'd probably be a lot more interested to look at something like Kiwi, okay? And why am I saying that? Well, the only reason I'm saying that is because at least here, there's some kind of structural support without even having to go to the weekly, right? And you see there are a lot of support levels further down. So it hasn't had that breakdown that Aussie's had. But even if you're to just go back on this daily or on the 4-hour chart we were on before, it looks like it's attempting a base. So I'd much rather try and focus on something which looks like it's attempting to base, okay? Whether it's to play a hold of this support zone, or whether it's to play a fake out break of this support zone or the breakout of this support zone, I still think this is, again, if we're looking in terms of the, you know, Aussie and Kiwi or the commodity currencies to a certain extent, I think here, this is the nicest level, the nicest chart out of them all Doesn't mean I necessarily want to trade them, because simply there is a bit more support here. And so look at this whole range and look at the action here. This is going to be very telling. If it gets bought, if it breaks and holds below, if it breaks and it comes right back above, that's something I would focus a lot more. For all those Aussie players, I'd say Kiwi is much more interesting chart. Okay. So guys, I don't want to make these too long. People like to skim these quite quickly. So again, remember, next Sunday we've got the full live session. Have an awesome trading week ahead. Keep it tight. Have a great one. Again, if you like the content, don't be shy about sharing it. And I'll see you guys for London Open tomorrow. Have a great one. I'll post the recording in a sec. Bye-bye.